And we're joined now by Jonathan Davis, economist and wealth advisor. Hello, Jonathan.
Drive Business Bulletins on Talk Radio with Sage Business Cloud. From accounting to payroll and payments, Sage Business Cloud takes care of it all.
You are there, aren't you, Jonathan?
I certainly am. Hello, Danny.
Thank you. No, lovely to talk to you. We've not worked together before. And why don't you come in off your long run-up and tell us everything that's happening in the business news?
Well, I think looking longer term, we see the Financial Conduct Authority today, that's the regulator, they're warning that some borrowers of mortgages, with interest-only mortgages, they might lose their homes if they don't sort out the holes in their plans to repay the debts. They've identified that over the next 10 years, borrowers will be more noticeably at risk of shortfalls over how much they owe, and based depending on when they pay, when their mortgage comes to the end. Nearly 18% of mortgages are interest only, which means they're not chipping away at the capital, the amount they actually owe. They're just paying interest. They've got 10 years. They need to sort it out. The problem is,
what's this cut-off point at 10 years? Because Jonathan, I myself have an interest-only mortgage, and a man came round and asked me a load of really impertinent questions about my future plans. I resented it bitterly. But why is it suddenly? Why are they suddenly going to start calling in the loans?
Well, as I say, they're not doing it suddenly. They're looking at it 10 years down the line because they see nearly 1 in 5 mortgage holders haven't got any or much plan to repay the mortgage. The problem is everyone assumes that house prices can only rise, and that will solve all their future problems. Of course, the issue, the question with that is, if you sell the house to pay off your mortgage, where do you live? But that actually leads me to my second story, which has a more global aspect, but it impacts potentially future house prices. Janet Yellen, who is the chairman of the United States Central Bank, the Federal Reserve, today and tomorrow she presides over her very last interest rate setting meeting. Now, she's unlikely to raise rates today or tomorrow, but she has raised them 5 times over the last 2 years, and markets expect another 2 or 3 rises this year, starting in March. That could take US base rates, which were only literally 0% just over 2 years ago, to potentially 2% by the end of this year. So that makes it harder, bringing it to a British context, that makes it harder and harder for Mark Carney, the governor of the Bank of England, to continue to avoid raising rates, which he absolutely has been doing for the last couple of years. And indeed, if you look at the strength of the pound sterling on global markets, it's been, soaring, and that suggests that global markets are buying the pound, expecting rates to rise. And of course, that cannot be positive for house prices.
Listen, thank you very much for the information, but more importantly for the carefully worded warning there, Jonathan. Thank you very much indeed. Jonathan Davis.